All right, Ripple XRP holders, welcome back to the channel. So we have a lot to dive into in this video with XRP sitting just shy of 75 cents right now. I'm going to give you an XRP price prediction. We're getting into some chart analysis. We're also talking about what's happening in the news right now with Ripple, what's happening with FedNow, and also the partnership set to take place leveraging Ripple's technology for FedNow. And then we're getting into the banking industry with a $22.3 trillion tsunami about to hit the crypto market with payment transfers inside the United States, and then talking about some global news as well too in the markets. And will the Federal Reserve instant payment system and service run on Ripple's XRP or Stellar's XLM? I have to share some powerful stuff. We're getting the chart too for XRP versus Bitcoin. We're getting to XLM's chart for a price prediction for XLM as well too in the short term. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. If you're going to become the first millionaire in your family tree. While I'm making this video, XRP just crossed 75 cents and we're getting ready for takeoff here, man. You know, as XRP consolidates sideways, some people are commenting saying XRP's cascading down. So I don't know what they're looking at. Maybe they were referring to when it went from, you know, almost 90 cents to 68 cents. It's completely normal. We talk about this every single day. With consolidation periods, there's bound to be some massive volatility as we blast off. And so where are we going to go next? That's the real key here. Because if we look back from 2016, 2015, right here, we see this resistance at 0.009 cents when XRP was struggling to break out from a penny years ago. And when XRP finally broke this resistance right here, it came back down to backtest it, and it was consolidating sideways alongside it for a few days before taking off. And so when XRP went up to it, we saw about 7 days, 1 week. So it took 1 week before it started taking off out of this range. So where are we right now? The only area of concern that I have for XRP is this breakout has not back tested the 76 cents resistance, which would be support right now. So this yellow box on the left hand side that I have is, for me personally, where I would be accumulating more XRP. I've been holding my XRP for a long time, man, even before the lawsuit and even after the lawsuit. So in terms of buying more XRP, I personally feel, again, not financial advice, don't buy, don't sell anything that we talk about on our channel. This is all educational purposes only. And I just give you example purposes in the news so you can inform yourself to make an educated decision, because as we're all crypto degenerates here, you know, it gets exciting to just YOLO the family farm, you know, and sell your children's toys and put it into the crypto market, or, you know, sell your car and put in the crypto market when the markets are pumping. But when nobody cares about these markets, you know, people aren't putting money in, but once it starts to pump, then everyone starts asking each other, should I buy now? What should I buy? So that's the reason why idiots lose. 95% of people in the market lose money is because they wait until the markets pump. So anything below $1 in the long term for XRP, I believe, is a steal because of what I'm going to share with you in this video and all of this information. And this is not moon math here. This is based on facts of what's about to take place. So, and what's taking place right now, because XRP and Bitcoin are the only two cryptocurrencies that have clarity right now. So that should tell you everything. And BlackRock is filing for a spot Bitcoin ETF with the SEC. And so XRP is the only other cryptocurrency on that list that would be adopted. I'm going to share with the Fed now. But this box right here, roughly between, you know, 70 cents and 56 cents is where I'll be accumulating more XRP. This would be a great dip buying opportunity for me personally. Now, in terms of how much time we've spent since breaking out right here, it's been 5 days. So we have, coincidentally enough, 2 more days until FedNow launches in the United States. July 20th is when FedNow launches. So will XRP take off from there? I don't know. I have absolutely no clue. To tell you that yes, it would, I would be lying to your face. So I don't know, but it's very interesting. Back in 2017, it took 1 week and then XRP shot up from a penny all the way upwards of 7 cents. So it pulled a 7x from that right there. So price prediction for XRP, well, where could XRP go in the short term? I mean, it's anyone's guess for that, you know, to the all-time high. I believe XRP retesting the previous high of April of 2021, you know, anywhere between $1.30 and $2 would be the first stop after it breaks this descending resistance that you can see right here. So if we were to trace from the all-time high on the left-hand side to the high of 2021, let me just go ahead and move this on the macro scale for you guys to be able to see this. That'd be about $1.30 right around here. And so this would be the next stop for XRP, which coincides with this resistance that you guys can see right here from August of 2021. So I believe that's where XRP might take a little pit stop on the mission to the moon right there before taking off from there. And when we break, gotta say if, but you guys know the deal here. But if we break the resistance here, a back test would be likely, or consolidation for an extended period of time, similar to what happened up here for XRP. When XRP broke out, it went all the way upwards of 7 cents, and then we saw a correction period down to 2 cents. And so expect something like this to take place. If XRP shoots all the way up to $2, well, it could come all the way back down to $1.30. And so the correction that took place in 2013 was a 61% correction. People thought the rally was over, but no, the rally just took 30 days before it took off to even bigger heights, all the way up to 48 cents. And then from 48 cents, we saw an extended consolidation period over the course of that bull run take place. How long did it take to go from 46 cents before it broke out again? Well, it took 211 days. 211 days. And so patience is key. Not only has patience been key for those of you that have been holding XRP before the lawsuit hit, after the lawsuit hit, but during this bull run, because my prediction, based on the 4-year market cycle theory, which I could be wrong here, everyone has their predictions and nobody knows. Even the billionaires have no clue what's going to happen in these markets. But my prediction is that by 2025, at the end of the year, between October and December, we're going to see the peak for Bitcoin, and it's going to be anywhere from $100,000 to $200,000 for Bitcoin, maybe higher. I believe that's a conservative price target, $100,000 to $200,000 for Bitcoin. When people start giving these crazy price predictions of $250,000, $500,000, $1 million for Bitcoin by 2025, it's most likely going to stop short below that, because that's just ape math, right? When you start seeing ape math all over social media and video thumbnails and all that stuff, I know you guys click this thumbnail because the trillions of dollars, but I'm going to show you facts of in the banking industry what's about to happen. But 211 days. So XRP corrected all the way down 74%. I believe it was even below then with that crazy wick. Look at this wick. Actually, that was a scam wick. So don't look at that wick. But yeah, over 70%, 70 to 80%, 200 days before having to blow off top at $3.60 some odd cents right there, depending on which exchange you're looking at. And so that's what it's going to be like for XRP moving forward. So we're going to see breakouts, consolidation periods for an extended period of time, whether it's a week, a month, 100 days, 200 days, and then you're just gonna have to be patient on the way up. In terms of price targets, I believe for this bull run cycle coming upwards of 2025, anywhere from $10 to $30. A full extension on the Fibonacci retracement on the macro is around $14 right there. So around $14 would be a full extension. That would be awesome, right? And I believe it's going to take time to get to that point. And the reason why I don't think it's just going to happen right when FedNow launches. When FedNow launches on July 20th, I believe there's going to be some, massive excitement with the partnership with Ripple and Volante and all that good stuff that I'm going to share with you in this video. But in order for XRP to even grow, there needs to be liquidity in the markets from, the Fed and the interest rates and inflation and all that good stuff. So Ripple is investing in an AI metaverse company partnered with FIFA and MasterCard. Here's some news for you guys. Futureverse, a platform leveraging both artificial intelligence and metaverse technology, raised $54 million in Series A funding, with crypto payment solution provider Ripple Labs participating. And so it goes to show that even though the liquidity is not there right now, companies are able to raise money, and with the right partnerships, leveraging Ripple, this company could do some awesome stuff. We'll see. The company previously announced a partnership with Ripple that includes an integration that utilizes the XRP token, which obviously surged because of the lawsuit. And the Futureverse funding news comes at a time when enthusiasm for metaverse startups and investments has cooled over the few years because of the bear market. And so when we look right here at the total crypto market cap, so what this chart tracks is the entire crypto market cap minus the top 10 projects. So take the top 10 off of CoinMarketCap. If you go over here, Bitcoin, Ethereum, Tether, XRP, BNB, USDC, Cardano, Solana, Dogecoin, and Tron, take them off the list, and it's every single other cryptocurrency. Now, one thing that's crazy to look at here is that it's only $105 billion in the rest of the market. That shows how much money out of the $1 trillion plus that is in the top 10 projects. And so when we look at this chart right here, a lot of people thought that the breakout that was taking place after 2018 to 2019, that we were just going to keep going up from here for this revival breakout. But ultimately, we had to consolidate sideways for an extended period of time, and then COVID hit, and then we saw this breakout followed by just grinding upwards for an extended period of time to go into the high of 2021. And so where we're at right now, arguably, a lot of people believe we are right here. We're getting ready for this massive breakout. Now, what would stop something like this from taking place, where we could see the chart ultimately, grinding out of this with the Fed, loosening its monetary policy, having a interest rate shift. I've talked about in different videos on how the interest rate shift would, in a pause and a pivot to start lowering rates, would actually not be a good thing for the market based on the past, but that's purely based on the past, right? Anything could happen in the future moving forward, but with partnerships taking place in this market and with gaming projects coming back, I believe what's going to lead the next coming bull run for the next few years up until 2025 is going to be metaverse gaming projects, NFTs, incorporating that, and artificial intelligence. And that's going to be absolutely massive, because the gaming market for people to actually use these projects was so early, and people were throwing money at metaverse based stuff that didn't even have a working product yet. So it was purely just based on an idea and something that looked good. And then the majority of these NFTs were hyped up based on celebrities that were paid to promote them, like Post Malone in music videos, and they didn't really have much utility other than some creative looking stuff. And so the NFTs that are going to have utility, the metaverse projects and the play to earn games that are going to actually have a functional product moving forward, are going to dominate the majority of this crypto total market cap growth minus the top 10. And so what we need to see right here on the chart is we need to see a break of this descending resistance. As you guys can see, multiple points of contact right here getting rejected at the 4-year moving average. And then also right now we're above the 200 or we're above the 50 moving average. And so we're at this resistance again, a break to the upside on the daily candles right here, followed by a back test and pushing to the upside. The next major resistance would be at roughly $133 billion market cap. So $133 billion market cap. If we can push beyond this zone right here, and we were to see the others just start breaking out from this range, and all of a sudden we see the markets just consolidate sideways, just like they did back in 2019 leading up to 2020, just kind of grinding up, and we don't see a massive correction. We see a break to the upside. Once we clear this area right here, I believe we're going to start to see some massive amounts of liquidity and money start flowing into the market. But ultimately, if we don't break this resistance right here and we just stay within this range, we could see another back test of this support one final time that it wicked at in June of 2023. And that would be some type of black swan event or something happening. I don't know what that could be. Some potential scare with interest rates or banking. Actually, a banking crisis would push money into the markets, but it's anyone's guess on what could cause this to take place. But ultimately, even if this took place, I would get excited about backing up the truck more, because ultimately I believe we're going to break out of this range leading up to 2025, because the market sentiment for the crypto industry is just way too bullish right now. It's way too bullish right now, and we've been bullish since December of 2022. So the bottom is in, clearly, based on the 4-year market cycle theory. So moving forward, we're going to start to see a push out of this range. Whether it happens, within the next week, month, ultimately long-term holding is the key here, because you guys saw how long it took. If I were to measure from this breakout back in June of 2020 before it reached the high, it was about 340 days. So about a year to reach the first high, and then ultimately 520 some odd days before we reached the all-time high of nearly $500 billion. It was almost $500 billion. So this market cycle, if I were to draw the fibs from the all-time high of this to the low, a full extension would be $1.8 trillion. I believe that's possible. And then, that would hold, if that we held 500 billion and the market cap was 200, so 500, 100, 1.52, that was about 25% of the total market cap. So if you were to multiply 1.8 times 4, what would that be? Well, we could just pull out the calculator real quick. I ain't that fast at math, but 1.8 times by 4 or 5, let's just do 4. That'd be about a 7 to a $10 trillion market cap for the entire industry this bull run cycle. So I think we could tap the $10 trillion market cap. And then, if XRP just held 5% of what Bitcoin held, I believe it's going to hold more than that. When I show you the chart, then XRP would perform very, very well. And here's what would cause XRP to perform well. Back on June 29th, the Federal Reserve came out with their press release naming organizations certified as ready for their FedNow service. And so they announced that 57 early adopters, organizations including financial institutions and service providers, have completed formal testing and certification in advance of the FedNow service launch plan for July. So in 2 days, you guys have 2 days to get ready for this. So we're gonna see what's gonna happen. This is gonna be pretty interesting, man. I'm getting my popcorn ready. You guys subscribe to the channel. Are you guys ready for this? Are you on bullrunners.com? Have you been on our email list receiving our videos, or is the YouTube algorithm pushing them to you? Because the early adopters included 41 financial institutions participating as senders, receivers, or correspondents supporting settlement, 15 service providers processing on behalf of payments, and the U.S. Department of Treasury. Now, if you guys watched my video yesterday, I talked about FNA, with the U.S. Department of Treasury, and then Ripple as a part of that as well too. It's gonna be insane. So here's one thing to note as well too. So U.S. FedNow instant payments with Volante, and so 2023 FedNow will be here soon. The Federal Reserve's new service will enable individuals and businesses to send and receive account-to-account instant payments 24/7, 365, and will be available to all depository institutions in the U.S. in 2023. And so if we look on Volante's page, you see BNY Mellon, Tab Bank, IDC, among many others. And right here, Volpay, it's called Volpay cross-border payments with Swift, GPI, Ripple, Visa, B2B, Visa Direct, and more, with 200 billion worldwide annual revenues coming from cross-border payments, not to mention the trillions of dollars of asset under management. Look, we scroll down here, Swift, GPI, and we see Ripple right here on their payments networks. And Ripple says, we view Volante as a critical partner for building Ripple's new real-time data-rich payment network. And also, if we pull up their official document right here on volantetech.com, the Volpay Ripple processor module speeds integration to the Ripple global settlement network. And so the solution here is and here's the challenge, okay? The challenge is banks and their corporate clients look for ways to improve payment flows and reduce the capital costs associated with traditional correspondent banking models, perhaps through consolidation of banking relationships, right? Regional banks have been consolidated into more commercial banks. That's been happening over the past 100 years. They will find that Ripple's modern settlement architecture offers near real-time settlement combined with significantly reduced costs of funds transferred. So working with Ripple, FedNow, Volante, Ripple has developed an interface processor module to the cross-currency solution called Ripple Connect to enable accelerated integration with Ripple. They're telling us this, guys. This is not a theory here. This is exactly what they're showing right in front of our face. And so, bullish, super bullish. Look at this right here. The Volpay Ripple processor model shows you exactly how it works. You have sender bank A, receiver bank B, payment generation, fee and FX rate quote confirmation. So you don't need to know the complexities of this, right? Ripple Connect. You just need to know that it's leveraging Ripple. So you need to know, right? That's the key there. So you don't have to be a blockchain developer in order to know how to make money through this. You just need to know where the money's going to move, because Ripple attorney says XRP court ruling could bring back U.S. banks back as clients. So they have to be very conservative in what they say. They can't they can't say, yes, guys, behind the scenes, we partnered with all the banks, because in their meetings as a team, they're like, keep things hush hush, guys. Just say we could, just say it's possible, okay? And don't spill the beans too soon. Major banks and companies in the US and around the world are already using crypto. They're already using crypto and its underlying technology on the blockchain for payments. JP Morgan, Chase Bank, the largest bank in the United States, last month went live with its first blockchain transaction for Europe-based corporate clients in Europe using its own token, JPM coin, and German software giant SAP has announced an experiment to try and speed up overseas payment using Circle's USDC stablecoin. And so, with this good news happening, by the end of 2022, banks in the US owned a combined $22.3 trillion in assets, up 32% over the last decade after adjusting for inflation. And so with what the Fed's doing, teetering, they're balancing out what they're doing with their interest rates to try and keep the economy from going into a recession or a depression. Well, one wrong move, here's the thing, one wrong move from the Fed and more bank runs happen. When more bank runs happen, more money flows into crypto and precious metals. When more money flows into crypto and precious metals, which projects are going to grow? The only ones that have clarity: Bitcoin, Ethereum, and then not the only ones, sorry. The rest of the market will grow too, just because liquidity raises the tides of the seas, which raises all boats. But some boats are pitted in the curl of the wave, man, catching that, well, pow. So software companies, Ripple Labs is hoping American banks will start using XRP and its other products. In an interview with CNBC, Ripple's general counsel, Stuart Adelroy, says he expects U.S. banks to go back to using the fintech firm's on-demand liquidity product. It's inevitable. It's just a matter of time for the announcements to start happening. So Ripple's been expanding outside the States recently. The company's blockchain XRP ledger has been trialed for transparency purposes, not necessarily related to finance. For example, Colombia's government last year announced it would use the technology to make land ownership more transparent. And one key thing too, guys, to know, quick little sidebar here, is the court ruling has sparked a surge in excitement about Ripple and XRP. So beware of the scam Ripple accounts and fake YouTube channels promoting XRP giveaways and XRP airdrops. And all you have to do is send, your XRP to this address or send some funds here. Remember, Ripple and its executives and us at this channel will never ask you to send funds anywhere in crypto. Yes, we do our own XRP giveaway to the community because we want to help you guys out, but it's us verbally saying that. If it's like Brad Garlinghouse's face on a video giving his old speech, and then you see an address or like a QR code to scan to send stuff to, and it says send this much and get this much back. Don't do that. That's a scam. That should be pretty obvious, but sometimes common sense isn't so common. And so we do have to warn everyone for that. And also in the comments below, watch out for like the AMZ 1000X coin comments. Like, we cannot remove those guys. Though they're literally, if you think about like an infestation of cockroaches that you try and get rid of, or fleas, like there's so many that keep coming. If you kill a bunch, like there's just too many. That's how it is with these scam comments. I don't know why people think that they're going to make an honest living doing that, or they're going to have a good place, in the afterlife for that. Those people have a quick path to destruction and a bad karma that they're building up for themselves. So just watch out in the comments below for that. The only things that we recommend is in the link of the actual description of our video. Watch out for the comments. We do pin a comment for you guys, but look at the description of our videos, not the comments of everyone else and what they're saying and the fake accounts and all that stuff. So back to the video. Just quick mention, I thought I should know that. You guys should know that. Will the Federal Reserve instant payment service run on Ripple's XRP or Stellar's XLM? And so if we look right here, the World Economic Forum is partnered with Ripple. They have it on their website, right? And the World Economic Forum is massive, guys. It's massive. So like it or not, whether you like the World Economic Forum or not, FedNow's future and what the triple clock theory says about it is going to be amazing, because in addition to the US Treasury, FedNow says that the 56 early adopters are certified, ready to move. But there are some things that could hold this adoption back because of banks' cooperation and all that stuff. But JP Morgan, Wells Fargo, US Bank, and BNY Mellon are also ready to roll on Thursday. So if you're watching this video Tuesday, you guys are early. If you're watching this video Wednesday, you're early. If you're watching this video Thursday, we're going to see what's going to happen, if XRP shoots up, because based on the chart in the past, it only took a week at this consolidation period from this breakout, but we could still see a back test. So any back test that would happen would be one final shakeout before we blast off. So there are 15 technology providers like Aiden, Fiserv, FIS, Jack Henry, Finastra, and ACI that banks and fintechs can use to connect to the FedNow rails. So it seems the race for instant payments in the US is on. And so there's a triple clock theory. Now, let me explain this. I thought this was a really cool concept right here that I found, because humans have been measuring time for more than 5,000 years, arguably longer than that, even though time's an illusion. Measuring it to know how to, compare yourself to the past or how old you are. It was 1500 BC when the Egyptians invented sundials and water clocks to, among other things, track the blocks of time between sunrise and sunset to better schedule the arrival and departure of ships bringing goods into the country. It was the Sumerians who created the base 60 numerical system in the 3rd millennium BC, which would become the basis for timekeeping today. Hours were comprised to 60-minute intervals and minutes of 60-second intervals. Mechanical clocks that followed in the mid to late 1200s were perfected over the subsequent 300 years, making it possible for time to be measured systematically and consistently with precision everywhere in the world. So we measure time because there's a finite amount of it in the 3rd dimension, in a day, in a week, and over a lifetime. People use time as an organizing construct to manage their daily lives. Athletes count time because they want to beat their personal records. The amount of time that it takes for big things to happen makes news, whether it's how long it takes to capture escaped convicts out of Alcatraz or how long it might take for inflation to hit the Fed's 2% target. People want to make the most of their time because it's the most precious asset we have. You can always get more money, but you can't get more time back. Wasting it is low on everyone's list. So I value your time, and I want to provide as much information as possible so you guys can get results. And so you can become the first millionaire in your family tree. So counting time in the business world is how economists and business leaders measure productivity. And being more productive with your time is going to be a key to scaling your income, because the minutes, hours, and days needed to complete a task and the number of people required to deliver the expected outcome, like people, businesses want to optimize how the workforce's time is spent and are loathing to waste it. Even though by some accounts we all waste 24 billion hours a year at unproductive meetings, at least we did until people could multitask under the table with mobile phones or when cameras are off during Zoom calls to do other things. But it turns out that businesses themselves have their own internal clocks, a measure of keeping time often set by how long they've been in the market, the maturity of the markets in which they operate, the number of competitors competing for market share, and the tech that they use to power, manage, and measure the business performance. So these internal clocks set the pace for how decisions are made and how effective businesses are in creating a market advantage by continually innovating the products and services that their customers value and want to use. So what does this have to do with XRP? Because for FedNow to scale, early adopters will have to see success fast based on this time theory. Igniting a new payment network requires volume to scale, and how quickly that happens is vital. Having early adopters connect is one thing, but having them transact is another. And the TCH experience shows if that takes too long for whatever reason, early adopters will lose interest, in the traction necessary to create the network effects that drive scale will show. They will likely shift to other real-time payment alternatives. Now, that's not a bad thing for Ripple, because Ripple's still going to be there as another solution for all these other companies and all these other banks to use. It just takes more time for that. So time is of the essence, because in the race for, remember the BlackBerry? For those of you guys that, if you didn't watch the BlackBerry recommendation from my last video, go watch that. There was a race for mobile phones because there was this sea of Wi-Fi, of free Wi-Fi around us. As human beings, we are like fish out of water that don't even know that we're living in a different form of water. Like, imagine being a fish. Do you guys think that fish know that they're living in water? No, they probably don't even know what water is, because water to a fish is air. So air to us is water to a fish, right? So when a whale comes up and breaches out of the ocean, what do you think a whale thinks when it hits air? It's like, oh, I'm going into space. Or do you think a whale goes, I'm going into water? What do you think a whale's thinking right there? So for us, there is stuff going on around us all the time, right? So time is of the essence. And so in the absence of interoperability, achieving real-time payments ubiquity in the US will require that every bank in the US, all 10,000 of them, be connected to both TCH and the FedNow rails. Persuading banks to do that will require the availability of use cases that are compelling enough for consumers and corporations to integrate and support. That seems ambitious and even improbable, particularly since most banks haven't adopted either network, and since not every bank is a commercial bank that is, doing the elephant walk with Jerome Powell. So most likely is that the big banks and technology partners connected to both will create the missing ubiquity by becoming the real-time payments orchestration layer for banks and other third parties. The decision then they face is how to route transactions. And so one thing that's interesting to know is in 2017, it was the real-time payments technology clock that set out to disrupt how money moved between bank accounts in the US and the rails that until then cleared and settled those transactions. So fundamentally changing the speed to compress decades into days for clearing and settling payments was the promise of the first new US payments rail in 40 years, real-time payment, RTP, that Ripple is pioneering. The press release announcing the launch described the participation of then 25 owner banks, the biggest of the big in the US. And along with the expectations of introducing a host of new scenarios using real-time payments and new markets that would see it as a differentiating value proposition for their own products and services. The stated goal was then to reach ubiquity by 2020, which didn't happen because of closures and businesses just putting things on halt, and everyone was just living in fear at that time, meaning that every financial institution in the US should have been connected to real-time payment rails and use it to innovate client-facing payments in those 3 years post-launch. So we're at that 3-year post-launch mark this year. Now, 6 years later from 2017, the US remains a long way from ubiquity and adoption of account-to-account real-time payments, even though 11 times more banks are members of the RTP network today than at launch, and nearly 2/3 of the US bank deposits are connected to it. Being connected means that those banks can move transactions over it if they develop use cases around and promote them. And so, of course, adoption and use cases go together to a degree. It's hard to get substantial transaction use without widespread network adoption, but ubiquitous adoption doesn't guarantee widespread transaction use, which requires use cases that banks market and customers buy. And so with the SWIFT network and what we saw with SWIFT taking place and how long that took, a decade or two, a few decades for it to really be adopted, FedNow, I would expect it to take longer than a week. And so with the money moving in the markets, it's going to be a grind upwards, but we're going to see these green candles followed by consolidation periods for extended period of time. So when you see what happens here with the psychology of a market cycle with people is when the green candles start taking place, people start FOMOing in on the way up. And when it peaks out for a rally, people are FOMOing in, and then you see a correction period of 50 to 70% take place. So for example, during this rally for XRP, let me go back to this chart over here. Let's see what XRP corrected at when it saw this rally all the way up to, depending on what exchange you're on, 94 cents right here. So if we were to see, most people were buying up XRP. The idiots were buying XRP at the absolute top. Calling them idiots is one thing, but in the short term, but in the long term, they're smart people. In the short term, idiots are waiting to buy at the top, right? And these markets would not work if there weren't idiots out there. So 95 cents all the way down to 66, 67 cents, 30% correction right there. And then, the idiots are the ones who probably bought at 90 cents and sold at 65 cents because they just didn't know anything about XRP. They don't have any patience here. And so if you bought XRP at 95 cents, you're not an idiot. You just have to probably hold for, another year, 2 years, and just wait. Hold off for XRP to start really rallying and going crazy, and then focus on making money elsewhere, man. If you're trying to strike it rich from crypto and you don't have a business on the front end, right? You see the cash flow quadrant that Robert Kiyosaki talks about. You have employees, small businesses, self-employed, and then you have big business and big brands, and then you have investors. You want to build a big business and a big brand, and that's what we help people do. We help people develop brands. So when you have money coming in from your brand in a business that generates you a lot of passive income, then you could be able to scale. So if you guys want to learn, how we're able to scale over $100,000 a month, over $3,000 per day, and how you can start scaling your business to an extra $250 to $3,000 per day. If you want to be able to do that, then check out bullrunners.com. If you're ready to become the first millionaire in your family tree, just click the big button on the page, put in your best email address, watch the video on the other side. We're doing XRP giveaways, we're doing crypto giveaways, we're doing cash giveaways, we're doing NFT giveaways. We've already given away over $70,000 so far in the past few months. We're going to be giving away over $100,000 this year. So if you want to win, definitely check that out. But looking at XRP to Bitcoin right here, this is amazing. This is amazing because look at this symmetrical triangle right here. And so we see that XRP has been consolidating sideways for a long time, since 2019. All the way down 2020 was the low, but this consolidation period, XRP really hasn't done anything until recently. And right now, we see a break of this resistance and this candle close on the weekly candles. If we see another weekly candle close above this, then I believe XRP is going to spring compared to Bitcoin all the way up to this resistance right here, which where we are from that right now, is another 60% compared to Bitcoin. So in terms of what's a better hold, clearly XRP is a better hold than Bitcoin right now in terms of percentage performance, and where we are compared to the all-time high in terms of XRP, we're about 800%, 900%. So about an 8 to 9x away from the all-time high when XRP was rallying back in 2017 and the peak at 2018 before we saw the bear market take place. And the high of 2021 for XRP was cut short, obviously because of the lawsuit, but it formed this massive symmetrical triangle. So not only do we need to look at XRP to the US dollar, but looking at XRP to Bitcoin, this is big news, guys. This is big. If I zoom in here more, just so you can get a better lookaroo at this, because XRP has wicked off of this resistance back in September, and now the fact that we just closed on the weekly candles above it, we even wicked way above it, which is massive bullish sign. And then on the MACD, we are in positive territory as well too. And you guys see that we're above. You saw the lines flip right here, bearish, right? When you saw the MACD flip below the signal line, now the MACD flipped above the signal line, and it's above it right now as XRP rallies. And so holding right here for a little bit. Then once we see FedNow payment rails take place and these banks start to adopt it, I would expect something like this to take place, where we see another pop for XRP and maybe a consolidation, pop back up to this resistance right here, and then consolidation for an extended period of time as XRP rallies up. Maybe a week, maybe a month, maybe 200 days. I don't know how long it would take for XRP to consolidate right here, and then we go higher. And then we go higher from there. So we'll see. We'll see if that happens. Ultimately, in terms of XLM is going to perform well as well too. We see this falling wedge pattern right here, this resistance. If I draw the fibs up, a retracement of 0.5 to 0.786 would be roughly 42 cents to 63 cents in the short term for XLM.